So today the Bitcoin price is $20,600. And as you can see, we have the looming death cross, which we have only had a couple of iterations of on the previous cycles. And today I plan on showing you exactly what this cross means and if it is actually a bullish or a bearish thing. So let's get straight into it. This won't be a very long video, so stay tuned and grab yourself a cup of coffee. Good morning to all of you out there. Look, I've marked out a couple of key levels over here. The yellow is the times that we've had the cross to the downside, and the white ones marked the cross to the upside. I'm going to bring that up in a second. But first and foremost, let's start with our usual moving averages and see where we are relative. So having a look over here, you can see that the Bitcoin price has bounced nicely off of that 255, and it is currently forming a bit of an indecision candle, at least on a weekly time frame. If this candle can turn green and close full body into the end of this week, that could mean that the bulls have a chance of reversing this entire market. But we won't be too quick to call an actual reversal yet. I definitely like to wait for confirmation, and previous historical data does not necessarily suggest that the future is going to be that way. So let's get straight into it. So what am I talking about? Essentially, it is the pi cycle bottom, the death cross over here, which is actually historically turned out to be a very bullish indicator. And I'm sure some of you may have seen this doing the rounds over Twitter. And I want to show you the previous cycles, how that worked out. So bear in mind, the yellow dashed vertical lines is exactly where it signaled the cross to the downside. And for those of you who are technical out there and you wish to know, it's essentially using the 471 simple moving average with the 150 EMA. So I want to zoom in on the previous cycles to show you what this looked like and what happened afterwards. So if you have a look over here, you can see that as the cross happened, and I wanted to go and back test to see that this is exactly the way that it did actually play out. And as true as anything, it is. Let's quickly remove those. 1 second. Let's just remove the vertical lines over here so that you can actually see clearly. This will probably be quicker. I just want you to be able to see those exact wicks. So you can see it crossed right over there, and you have the wick bottom. In 2015, we proceeded to rally, and we actually didn't ever come back down near those low prices again. And it works both ways. There is also a pi cycle top indicator, but I don't want to clutter it on too much. I back tested that as well. And would you believe it? It pretty much marked it to the top. I think there was one iteration where it didn't work out properly marking the top, but it got it within a week or two. So with that being said, that could mean that there is a potential that we have reached the bottom, although this time is different with regards to the macroeconomic environment and everything that's currently going on in the world. So that's why I say that past results don't necessarily represent what is going to happen in the future. But when we combine this with other smart technical analysis skills like trend trading and looking for a series of higher highs and higher lows, then it can be something quite useful. Here's your next one over here. And it's very much the same thing. The 2018 December bottom, it marked that. Let's turn off the drawings over there so you can see it clearly. It marked that. Here's your cross. Your cross happened right there at the top. As it crossed, pretty much that was the final week. It marked the bottom of that market. And going on forward to where we pretty much are right now is the next one. So what does this mean? Does this mean that we're going to rally from here? Well, what I would say is that you can mark off some key levels. Look, if this candle closes green, and to be very conservative, I would also mark off at the very least, I would mark off, put on your magnet, the previous week's high. So if we manage to clear that previous week's high at $22,336, it really has a chance to get going over here. So we'll see if this what this is showing on the lower time frame charts. But for the time being, I will still remain very cautious, because this time really could be different. Maybe we have a little bit more volatility leading into next week, and we could end up going lower. But at the end of the day, it has been a good indication that things are completely oversold once these cross. they work like magnets. Price tends to revert straight back into them. It tends to pull up into those crosses. And that's typically the way that I use EMAs and other moving averages. So moving on to the funding rates over here, you can see that the market is still in panic. You have negative funding rates, but we haven't reached those capitulation levels yet. And it's not to say that that has to happen. Maybe this cycle we won't bottom with a capitulation. That is also possible if you have a sort of L-shaped recovery, which would look something like this, then maybe there wouldn't be a capitulation. What is an L-shaped recovery? Well, essentially it's where the market goes straight down and then you just go sideways for a very, very long time. Bringing me onto the next chart over here, I said yesterday, keep an eye out on this final support. Bulls have to defend this level, and that they did. That also confirmed on the 3-day. We do have the MACD cross to the upside. We're working on our second green histogram now. So hopefully this can mean a little bit of further upside potential for the bulls and they can get this thing moving. So this chart also reiterates, right? I showed you yesterday, the previous cycles when we extended away from that 200 simple moving average on a daily chart. We came back, I think the first time was 74%. When we tested into that and rejected, we proceeded to sell off 74% whilst the chart or the simple moving average was angled to the downside. The last time that we did that, so that was the 2015 one. The 2018 one, we proceeded to sell off 63%. And this time now we have 63.47%. So using historical data with all these moving averages and EMAs, we can definitely see that there is some possibility that we could at the very least have a mean reversion bounce. But at the very least, we need to see a proper cross of the moving averages on the 4-hour chart, which I'll show you exactly what I'm looking for, as well as this chart over here. And I've mentioned this many times before. This is your 34 EMA on a daily chart. If we manage to clear this, it will be beautiful. You can see that this is starting to slowly lose its momentum to the downside and build a little bit of speed to the upside. If price breaks through this level over here, it will be super key. And you can see with relation to what I showed you on the weekly chart now, it's pretty much coming in at that same level. So if price manages to get above this EMA and break that downtrend, which has been governing all the lower highs right now, if that had to happen today, for example, would need to clear in at 22,500. If we can close a couple of daily candles over there, that will be the making for a proper reversal, because on a daily chart, not only are you going to have a series of higher lows. So if you look relative to there, you got your one low, your next high low, your next high low, you have your higher high. This one is very marginally another higher high, and then you're going to get your third higher high. So we need 3 to create a trend, right? 1, 2, and 3. That is your signal now. It's probably safe to go long off of this level over here. But I will definitely keep you up to date. We need a little bit of price action to develop and unfold before we come to any major conclusions, because at the end of the day, this could still be a major bull trap despite all those other bullish indicators that we've seen. And I want to give you an example. So an example would be over here. You saw that we went through a strong downtrend, right? This was coming off of the all-time highs, pushed into that 34 EMA, sold off, tried to get above, sold off, tried to get above, sold off. Now it looked very similar, right? You start to see that it recaptures it. We start creating higher highs and higher lows very marginally, and then boom, look at that mega trap. It got sent straight to the downside. So we need to be very careful, and we need to manage our risk and not ape into everything all at once. Looking at the 4-hour chart over here, I'm definitely treating this still as a range. Nevertheless, it does have the series of higher highs and higher lows. I put here number 3 question mark. I think we can confirm that now. Higher lows, that is confirmed, so we can label that over there. But we've recaptured the mid-range, targeting towards the upper range. And then same thing, what I just mentioned now is that I want to see the moving averages, or the EMAs at least, crossed in a bullish posture. So if price manages to clear those $22,000, $23,000 levels and it manages to stay there, what that would create is it will let the yellow cross above the pink, which crosses above the blue, with all of them angled upwards. So you have the 21 above the 50 EMA, above the blue 200 EMA, and that is the making of a bullish posture, which has the potential to gain some major momentum and completely reverse the trend. And an example would be looking at UniSwap. So UniSwap was one that I was watching. You want that golden cross to occur where these moving averages, or EMAs at least, cross above one another, and you want them to hold this posture with price above. Yesterday I showed UniSwap and I said, look, I don't know if it's going to manage to make a higher high. So at the very least, raise your stop loss to break even from that long trade that we took, and consider even taking some profits. But look there, I'm eating my words. It did make a higher high. So you have your next series of higher highs. And at least on UniSwap, there is a new trend that's being established. And we can see this across the board of various altcoins. We can just wait for the next higher low before you start aping into anything, because nothing is going to go up forever like this. There will be some sort of a pullback. And I think that's really where bulls need to step in if they do want to reverse this entire market. So very, very short, quick update. Just one more thing I just wanted to show you over here. If you click in the link of the description below, please make sure that you follow my correct Twitter. If you click there, I have a lot of scammers who are copying the account and trying to get money out of you guys. I'll never ask you for money. The only way that we ask for you to support us is a win-win situation. It's by using our referral link. There is actually just a couple of days on Monday. The bonus ends as a 15% trading discount on trading fees, as well as a competition where you can win up to 1 BTC. And that is for Bitget. Yesterday, I mentioned on Bitget that they have this strategic trading grid where you can use futures and spot. So they're giving about a 387% per week API. And yep, no secret, if you do use the affiliate link, essentially you're supporting us, because instead of the exchange taking all of the trading fees, they split that with us as a partner for referring you. I have started to use Bitget quite a lot. I quite enjoy it. And then again, just follow me on Twitter, because I will keep you up to date with my day-to-day activities. I'm going to be going away for the weekend, so I probably won't be doing another stream until later on Monday. And guys, that really is it from me. I really appreciate each and every one of you. Make sure that you trade safe out there. And until next time, I'll see you guys on the next video. Cheers for now.